We're going to learn a lot here. We're going to check into the world of finance this morning. Joining us to talk all about taxable distribution from mutual funds is Brent Wilsey of Wilsey Asset Management. Brent, good morning. Good to see you.
Well, good morning. Good to be here for this complicated situation.
Yes, I think a lot of people have mutual funds. What do we need to know? What are the basics of mutual funds?
Well, the base of mutual funds is what happens at mutual fund is that everybody puts their money into a fund. You have a fund manager that's managing that money. And, you know, hopefully it goes up is what you're looking for. The problem is because you're with everybody else in that fund, the fund manager has to meet all those people's needs. And what I'm talking about is something we call net redemptions. Net redemptions happen because when you take money out from the fund, you may stay in the fund, but people are taking out from the fund on the other side. Well, the fund manager has to sell to meet those redemptions. Well, what happened this year, because people leaving funds saying, oh, I'm getting out of funds, I'm gonna go to that 5% CD or T-bill. Well, the fund manager had to sell positions to raise the cash to meet those people who want the money out. Here is the problem. We now have probably about 200 mutual funds now have redemptions or capital gains of 4% or more. Because when that fund manager, remember, he had to sell those positions, those are taxable. So now he has to pass that tax on to these shareholders. Could be a short-term capital gain tax, which is fully taxable ordinary income, or long-term at 20%. The problem is they don't tell you this ahead of time. That's why I'm here telling people that have mutual funds, you're going to get this. It's a terrible thing for Christmas because you think everything's well, and it's not well because these are taxable. And what's even more amazing, you could have bought that fund, we'll say in July or something, be down, and even though you're down in value, you still have to pay the tax because of the distributions.
Okay. All right. I'm still confused. So why is December unique?
They just wait till the end of the year to do it because you know they try to maybe offset it. Like this is one benefit of having ETFs or individual equities because you control it. A mutual fund, you're not in control; somebody else is. So they wait till the end of the year to try to do the best they can. But this year, because of all the redemptions of people leaving mutual funds to go into T-bills and so forth, there's a lot of people left holding the bag that are going to pay those capital gain taxes.
Okay, so what does a mutual fund? Somebody who is investing in a mutual fund, what's the best thing for them to do right now?
What they need to do, and again, if you're in a 401k or an IRA, you don't have to worry about this. It's only if you hold these outside of a qualified plan. What you can do now, hopefully, your broker advisor has given you a call and saying, hey, we have this situation, we need to do something about it. If they don't do it and you get surprised by this, you may want to switch broker advisors because they're not watching your money for you. But what you can do is you can look to say, well, where do we stand? You may be able to offset these gains by other losses in your portfolio so you don't have to pay taxes on these distributions. Okay. The other thing you can do, especially if you've lost money on this fund, get out of that fund. Get out now because you're going to pay taxes when you've had losses. And what you can do is you can turn around and buy another fund that is very similar for that so you don't miss the gains. Because we had a 4%, PCE, personal consumer expenditures for the Fed. So we think we're going to have a very good December. So you don't want to sell out of this fund, miss the gain of maybe 3 or 4%, pay taxes. So if you're going to get out of that fund, you can sell that fund and then buy another fund very similar. Because if you don't do that, if you sell it and buy it back within 31 days, then it's a wash sale. Now you still got to pay taxes, and it does get very complicated. This one, it's so important to have a good advisor that knows what they're talking about.
Okay, and people can get your newsletter and they'll learn about stuff like this. Right?
Yes, yeah. And that's what we do in the newsletter. We try to inform people. Our whole thing has been, I've been doing this for over 40 years now, is to educate people about stuff. We don't sell, we try to educate people. Our money's managed the same way as our clients' money, and we do this to try to help people understand investing. It's so nice when I go out and people say, I love your information on KUSI. I love the newsletter, it's very informative. That's what we try to do, is help small investors because it is difficult. And if they want that newsletter, they can get it at our website, smartinvesting2000.com. Again, smartinvesting2000.com, all one word.
And if somebody is watching and they're like, I'm really confused, I'm in this position, this might affect me, can they call your office?
Yeah, they can call our office, yeah. Okay. And there's people that we help out very quickly. If we try to do what we can to help people out. But if you do have a broker or advisor, and again, as I said, if they have not told you about this situation, because it could be big, 200 funds, a 4% more distribution, that's going to be a big tax situation. Sure. And if you don't wait, and if you don't do anything about it, and January passes, you got to pay tax. So they should be calling you now saying, hey, Mr. Jones, you're going to have this distribution. We need to talk about this on how to save you from paying taxes. And again, especially if you have a loss in that fund already.
All right, good stuff.
Thank you.
All right, Brent.